what's going to be powering the precious metal bull market in 2026 is going to be de-dollarization, inflation, and a highly accommodative Fed. We know that Trump, I think he said he's made his decision on which of his flunkies is going to be installed to run the printing press in mid-2026, but they are going to run it. I'm going to say the same thing this weekend. I said almost every weekend last year. Don't wait to Monday to buy your gold and silver from Schiff Gold. Buy it Friday night, Saturday morning, Saturday day, Sunday morning, just anytime before Asia opens for trading Sunday night, because I think we can see another huge move up in gold and silver on Monday. So don't wait for the crowd. Beat the crowd. Buy now.
The precious metals bull market heading into 2026 is being fueled by forces that are already visible today, not distant predictions. De-dollarization, persistent inflation, and an increasingly accommodative Federal Reserve are creating conditions where gold and silver tend to move suddenly, often before the broader market reacts. Peter Schiff, a veteran macroeconomist and longtime advocate of sound money, points to clear historical data to support this view. During previous easing cycles, gold delivered substantial upside as real interest rates turned negative and confidence in fiat currencies weakened. Global central banks have been accumulating gold at near record levels, while U.S. deficits and debt servicing costs continue to rise. At the same time, repeated liquidity injections have a track record of triggering sharp weekend gaps in precious metals, particularly as Asian markets open. Schiff argues that waiting for confirmation often means paying higher prices, as inflationary policies tend to reprice gold and silver rapidly rather than gradually. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
You want to buy gold, you want to buy silver. Gold, I don't think there's very much downside risk at all. I don't think gold's going below 4,300. So if you're buying it now at 4,500, I think there's minimal downside in gold at 4,500. Right? Silver, a lot more volatility, which to me makes sense given the magnitude of the breakout. Right? We blew through 50. I mean, we basically paused there for a couple of weeks maybe, and I was forecasting on this and on my main podcast that once silver broke above $50, it was going to be a moonshot and that 50 would be support. Well, 50 was only support briefly. I believe support is now 70. I don't think we're going down to 50 at all. The opportunity to buy $50 silver is gone. And I hope a lot of people took advantage of it before it left while it was here. In fact, all last year, I told people, buy 30, right? 30 is the new 20. Silver's not going below 30. Then I said, buy 40, 50. Now I'm telling people to buy $70 silver if you get the opportunity to buy $70 silver. The low of the pullback after silver got above 83 was just above 70. And ever since silver got above 80, it's never been below 70, although it's gotten down there. I think the real support zone is 71 to 75-ish. So that's probably the best place to buy it. But the problem is, I wouldn't wait for 71 or 72. I just buy it at 79, because here is the problem for long-term silver buyers. I'm talking about physical silver. I'm not talking about people who want to trade it on the COMEX, doesn't really matter. I'm talking about if you want actual silver delivered to your house like we do at Schiff Gold, you just got to buy it now. And that's because I expect the premium on silver products to soar in 2026. So you've got two things that are going to happen. You got the price of silver is going to go up, but the premium on the products, what you have to pay to actually buy a 1 ounce coin or, a bar, is going to go way up because of the supply disruption. There's simply not enough physical silver being mined to meet the demand that we're going to see. China already has an embargo. They're not exporting any silver, and they're the world's largest producer. Investors are now starting to wake up to what's happening with silver, and there's just not enough of it. So the premiums are going to go up. So even if you get lucky and you wait for silver to pull back to 71 or 72, by the time it does, the spread or the premium that you have to pay on the products may have widened by so much that it's actually more expensive. So I think if you're a physical silver buyer, you got to buy it now while the product is available, while we can get it. I mean, I have a feeling that later in the year, we're going to be out of stock, right? You're going to want to buy physical silver. We're just not going to have it to deliver. That's going to be the problem. Or maybe we can get it to you, but the delivery times are going to be later. Right now, what I can tell you is we've got the supply. We haven't had to really increase the premiums. So it's available. Buy it. Buy it while it's available. Now, of course, if you don't need physical delivery, that's not as big an issue. And of course, I still think that everybody should open up an account with T-Gold. That is the part of Schiff Gold that deals with the storage program that we're doing, that we're going to build up to an e-commerce platform where you're going to be able to take delivery of tokenized gold and tokenized silver probably too. But right now you can buy gold and silver and not take delivery and leave it on the T-Gold platform. So you can do that too. But when you're buying for your own storage, for your long-term, self-custody, you just got to buy. Forget about the fact that it's $79, $80. Just be glad you can get it, because silver is going to be very, very scarce very soon. And the price, I think, will be a lot higher. And again, this is not just a precious metals bull market. Copper got above $6 this week for the first time ever. So it's all the market. Look at nickel, look at zinc, look at lead. I mean, prices are going up. And again, it's not just going to be metals. Agricultural commodities, I think, are going to really boom. Eventually, you're going to see oil go. I mean, it's held these lower levels longer than I thought. But even with what's happening in Venezuela, and I'm going to mention that later in this update, but I think that oil is looking strong and is bottoming. But this is a inflation-fueled commodity bull market, but also a supply shortage because of decades of underinvestment in capacity, in exploration, in development. So it is a perfect storm if you're long precious metals, but it's a disaster if you need to buy them, or if it will be for the industries that need them. But right now, investors need to take advantage of the fact that the prices are still not anywhere near where they're going to be, and we still have the supply. On the gold and silver mining stocks, I think as good as last year was, it's possible that this year could be even better. That's how cheap these stocks still are. But I think 2026 is the year they not only catch up, but they surpass the big stocks. Just like silver caught up and surpassed gold in 2025, the juniors, the true juniors, are going to catch up and surpass the seniors, I think, in 2026. And the best way to play that move right now is with my gold fund. I'm going to say the same thing this weekend. I said almost every weekend last year. Don't wait to Monday to buy your gold and silver from Schiff Gold. Buy it Friday night, Saturday morning, Saturday day, Sunday morning, just any time before Asia opens for trading Sunday night, because I think we could see another huge move up in gold and silver on Monday. So don't wait for the crowd. Beat the crowd. Buy now. Don't forget about the new program.
The precious metals market is entering a critical phase where availability matters as much as price. Gold shows limited downside risk, while silver's breakout above long-term resistance has shifted the entire structure higher. What once acted as resistance near $50 is now far behind the market, with strong support forming in the low to mid $70 range. Physical silver is becoming increasingly scarce as global supply struggles to keep pace with rising investment and industrial demand. With major producers restricting exports and years of underinvestment limiting new supply, physical product premiums are likely to increase alongside spot prices. This creates a situation where waiting for lower prices may actually result in higher total costs. Across commodities, inflationary pressures and structural shortages are aligning into a broader bull market that favors hard assets and tangible ownership. Let's get back to the interview.
Not the big companies in the GDXJ, but real juniors, not mid-tier, little guys. And they didn't have anywhere near the big move, but I think 2026 is the year they not only catch up, but they surpass the big stocks. Just like silver caught up and surpassed gold in 2025, the juniors, the true juniors, are going to catch up and surpass the seniors, I think, in 2026. And the best way to play that move right now is with my gold fund. Euro Pacific Gold Fund, EPGIX, is the way to buy that, or contact the brokers at Europe Pacific Asset Management. We also do separately managed accounts in the mining stocks where we have significant weighting into these junior mining stocks. Now, what's going to be powering the precious metal bull market in 2026 is going to be de-dollarization, inflation, and a highly accommodative Fed. We know that Trump, I think he said he's made his decision on which of his flunkies is going to be installed to run the printing press in mid-2026, but they are going to run it nonstop. In fact, an indication of what Trump wants to do at the Fed was shown just this week with Fannie and Freddie, the GSEs, where Donald Trump is now ordering the GSEs to purchase $200 billion worth of mortgage-backed securities. Why does he want that? Because he wants to use government to reduce mortgage rates by buying mortgages, right? It's his own kind of mini QE run through the GSEs. I think central banks will buy more gold in 2026 than they bought in 2025. Not just the central banks that have already been buying, but other central banks who stood by and didn't buy. While other central banks did, they're going to buy, right? They're going to be FOMOing into the gold because they're going to need gold as part of their reserves. I mean, gold last year replaced the treasuries as the largest reserve asset of central banks. That is going to continue. That trend is a massive and important trend that is going to be going on and on for many, many years. And that is also going to fuel demand for gold. But now you're also going to have individual investors really stepping up their demand. They were pretty much absent last year. They're not going to be absent this year. This is going to be the year that Wall Street wakes up and discovers precious metals and the precious metals mining companies. The Trump foreign policy, the tariffs, the economic policy, the deficit skyrocketing. What's happening now is what I've been forecasting would happen for years. Right? The real crash is coming. The one that I wrote about in my 2013 book, The Real Crash, America's Coming Bankruptcy. It just took a lot longer than I thought. I expected the dollar crisis to happen much sooner after we launched QE following the 2008 financial crisis. Instead, it's going to happen now or after this coming crisis. This is the dollar crisis. This is the sovereign debt crisis. We're really in 2007. We are around the corner from another major economic crisis. This one is going to lead to the dollar destruction and a collapse of the bond market. It should have happened over a decade ago. The fact that it didn't happen then means it's going to happen even worse now. And I think what really makes history rhyme, in fact, it's more like repeating. I was just watching on Larry Kudlow's show the other day, and he's talking about the greatest story never told, about the booming Trump economy. That is exactly the way he described the George W. Bush economy in 2007. It was the greatest story never told. Yes, the story that wasn't being told, except by me, was how it was a major bubble and how we were headed for a financial crisis. Well, Larry Kudlow and all of his Republican guests that were on, other than me, was talking about how great the Bush economy was. And I was talking about how it was a bubble and how we were about to collapse. And the same thing is going to happen again, right? It's the same Republicans who think everything is great because there's a Republican in the White House, although he's kind of a rhino, Republican in name only, because I'm not really sure what's so Republican about Trump. But Republicans voted for him. He's a Republican by party affiliation. You know, that's how he got into the White House. But the economy is actually in worse shape now than it was under Bush. And the mistakes that we're making are probably even bigger than the mistakes that were being made back then. And we're going to make even bigger mistakes this year at the Fed and with our fiscal policy when we officially enter our recession. You know, Donald Trump keeps talking about the fact that we have the booming economy, the hottest economy in the world, the strongest economy in history. Meanwhile, the statistics don't bear that out at all. And of course, if the economy was so strong, the dollar wouldn't be this weak. Gold wouldn't be this strong. All the things that are happening would not be happening. The deficits wouldn't be exploding. If we had a strong economy, we'd have smaller deficits, right? The strong economy would be flooding the government with revenue, right? people would be in better shape. People confidence wouldn't be at record lows. Trump's approval rating on the economy wouldn't be near all-time record lows if the economy was really booming, right? The media wants to think that, well, there's a disconnect. The voters just don't understand how great the economy is. No, they understand how lousy the economy is. The disconnect is the financial media. The disconnect is these BS government numbers that don't tell the real story. And, Trump understood that. That's why he got elected the first time, by agreeing that government numbers were BS, right? Well, he was right as a candidate. He's wrong as president. He now hides behind and uses those same numbers he called BS to justify how great he claims the economy is. And of course, one of the things he constantly points to is the stock market. Yes, we're at record highs. Yes, the S&P, the Dow Jones, and the Russell 2000 all hit new record highs this week. In fact, the S&P and the Russell 2000 hit new record highs today. Only the NASDAQ didn't make a new record high on the week. The Dow is almost 50,000. And people think, oh, that's such a big number because, it was 10,000 26 years ago. Yes, it was. And gold was under 300, and now it's over 4,000. Silver was under $5, and now it's $80. So, yes, in terms of dollars, the Dow has gone up. But in terms of real money, in terms of gold and silver, the Dow has gone way down. See, that's one of the reasons that politicians love inflation, because they can claim that we're getting richer even as we're getting poorer. Because it's easy to make the stock market go up if you're measuring it in currency where you destroyed the value. So if you debase the dollar, look at how expensive the Dow is. Yes. But look at how much more expensive gold is and how much more expensive silver is. Those trends are not only going to continue, where U.S. stocks continue to fall priced in gold and silver.
The precious metals cycle is now shifting into its most aggressive phase, with capital moving beyond prominent names and into areas that have been left behind. After years of underperformance, the real opportunity is emerging where valuation gaps are widest and participation has been thinnest. True junior mining stocks remain historically cheap despite a decisive move in gold and silver. In prior cycles, juniors have lagged early, only to outperform once monetary stress becomes unavoidable. With de-dollarization accelerating, deficits expanding, and policymakers leaning toward renewed monetary easing, the backdrop favors hard assets over financial assets. Central banks have already replaced treasuries with gold as a core reserve, and individual investors are now following. Meanwhile, U.S. equities measured in gold and silver continue to lose real value, exposing the illusion of nominal gains. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.